what I want to do with this video is explain what I'm looking for around this reversal here, this reversal point. Now the first thing that catches my eye is this sell-off, and then it starts ranging, even though it is slightly heading north. We get this range-bound market, highs and lows, fairly evenly matched, more or less. And then at this point here, we see this double top equal highs. And I'm always on the lookout for any time we see equal highs like this, double tops, double bottoms, or triple tops, triple bottoms, that kind of thing. See here, you could call it a triple if you like at that point. So we get this double, triple top thing. And I'm always suspicious when I see these equal levels like this, followed by this move here. Okay, it gets taken out. I call this the fakey shaky. I've talked about this in many videos in the past, but it's ranging through here. Have a look over here, the range. It's ranging through here. Get a bit of a spike up. But then we get this, well, they're going to be shorting it, so we'll call it a fake out. This draws more short traders in. Here's your fake out here, the fakey shaky, right? So we get this fake out. Short traders jump on board. More liquidity builds up here in the form of buy stops with these traders. Then big money takes it up and they wipe out not only a bunch of traders through here that have shorted, and then especially on this move, they take out their buy stops. This level here, this is a previous daily high. And what's resting above here is buy stops. Significant short, a ton of liquidity above in here and all through here. It wicks up through a previous daily high. See this thin wick? That's a telltale sign. So you get your double top. It wicks up and it's suddenly followed by the ICT displacement. Okay? It trades down with a vengeance. Now only big money, smart money, can move the markets. Look at this candle here like this. Only they can move the markets like this. And this will tell you that, this kind of price action, it occurs time and time again where you get the range. Well, it spiked through, but, we could pull that there. We get a balance area, as well as, have a look at this price action here. This is grinding up into it. Generally, we might see like a 3-drive pattern coming into it. 1, 2, there's kind of a 3-drive pattern. You can sort of see, there's drive 1, there's a second drive, and a third drive with a very shallow pullback. And you can pull a line through these tops, and you can mark up 3 of these more prominent drives along here. But then we see it ranging. But the thing with this price action through here, for example, is it's a balanced. We'll call it a balance area. This is where we see more or less an even number of buying and selling. And then up in here, most people recognize this as a balance area, but this entire movement here is fairly balanced. And then we see the spike above a balance area, a range, taking out liquidity, the fakey shaky, so it draws more traders in, and it trades back into this. They take out these stops here that are building based on these traders shorting in here. And of course, you've got liquidity up in here from way back. Okay, so all the liquidity through here gets taken out. And the thing that I'm looking for, once you see a sudden spike like that into a previous high or a daily high or low, followed by this huge momentum candle, the pullback to rebalance. So we've got this imbalance, bearish. So in other words, there's nothing left and right of this candle at this point and this point. So that's the imbalance. It trades back in through, and you'll probably find similar thin candles here on the lower time frame up in here. Trades back in, rebalances, and then we start to see, and look, this is incredibly manipulated and really tough to trade at times, because you'll see another sell, but then look what they do. See how they take out these highs then. All right, so you want it when you're trading a look, you got equal highs here. There's a spike up here. Same thing, equal highs, one spike up, a secondary spike, okay? Equal highs, one move above, a secondary move above. You want to watch out for this. In any case, when you're looking at like the euro dollar, any of the pairs that may be shifting gears like this, your stop really wants to be above this previous daily. Look back and you'll find the levels on the daily, weekly, monthly time frame. Mark them up. And if you're looking to short this, you don't want to get caught out. Even if you shorted on this pullback here, your stop really needs to be above the previous high, this high, and this daily higher time frame level, and go for a minimum of 1 to 2 risk reward, something like that. Because then it trades down and it spikes back up again. So you may have had another opportunity then to jump in short here. Where are we? We've got this move, and the pullback is where you may have gotten in here. Again, a stop above this previous high. A lot of people would have pulled their stop above these highs, and if you're too tight, you're going to get taken out. See that? So do that. And then as it starts to trade, when you start to see lower highs and lower lows, then you can get involved with this. On the fib pullback, fib retrace at this point high here down to the low. 50 to 618 is usually my entry point, short position. So let's just say we got in here. Then this is where you look, and you're going to place your stop. As it's trading off, you don't want to have ridiculously wide stops. And then you're off to the races. This starts trending then, and then we're going to be looking for our trend continuation strategy, pulling a fib from high to low. And then your entry points, the 61.8 fib through here. So, if you trade this well, you could be building your position short. And again, you're following the previous highs with your stop loss. And, there's a reversal. So, as I mentioned in previous videos, consider the trend. And we'll just draw that out, a picture perfect trend. You're going to be looking to enter. This previous low becomes resistance. Okay, so this is picture perfect. Previous low becomes resistance. So your entry point's going to be sell. You're looking for the retrace to short. And in this case then, stop above the previous high, 1 to 2, or however you decide to do this. Short. Again, short here, and then stop. We're looking for the previous high. Now the concept here is, once this is trending, and you can see a 45-degree angle or thereabouts, the previous high should not be taken out until such time as the trend reverses, and then we see a break of market structure here, for example. Right, there's our break of structure. So, you can follow this trend down, take every one of these retraces with your stop above the previous high, 1 to 2 risk reward. And then, you might get taken out down here, but hopefully, if you've been trading this from further up, you've got a whole bunch of winning trades in here that will back you up. Okay, so 1 to 2 risk reward, you need a 34% win rate to better than break even. So, if you can do 40, 50, 60% win rate, you'll come out ahead. But that's my take on the reversal. And I will shout out to ICT Concepts. Yeah, I've been studying ICT since 2016, actually. So when I jumped into Forex from the stock markets, I spotted this guy and really liked what he was talking about. Took all my money out of stock, and it's history after that. Anyway, that's that, guys. Now, I'd love to hear your comments. Definitely comment. And with that, I hope you have a great day. Safe trading, and we'll see you in the next video.